And after months of bliss, financial markets have started to turn extremely volatile after the crash on Friday last week. A subsequent reversal saw markets oscillate between gains and losses. Despite Asian markets rising today, 6 days of volatility across assets show a deeper anxiety taking hold amidst credit fragility fears. Broadly, the narrative last week was around the back and forth in threat and posturing between the US and China and their trade policies. Gold extended its blistering rally to new peaks, with the yellow metal hitting an all-time high of near $4,400 before retreating on Friday. Still, gold closed out the week with about 6% gains. Brent crude fell over 1% last week and is now down about 25% since President Trump's inauguration. Cryptos extended their slide with $600 billion erased on Friday. The digital assets saw about $2 billion in liquidations, adding to the record liquidations of $20 billion in the week prior, which wiped out over 1.6 million traders. Unlike past crashes, there was no retail rush to buy the dip, just silence. And now turning to Asia-Pacific stock markets, the seesaw in US and China trade rhetoric hits Chinese and Japanese stocks. However, the recovery in Indian stocks extended to the second week, with the blue chip Sensex index gaining nearly 2%. Indian stocks breached their 52-week highs and are poised for record highs. The Aussie index also showed a modest gain of 0.4% after the country touted a rare earth minerals investment bet. In the Americas, Wall Street stocks ended the week with a tidy gain, extending a bull market that's already adding $28 trillion to its value since April lows. The S&P 500 ended the week 1.7% higher despite a revival in long-dormant fears about hidden credit losses after bankruptcies and fraud-linked write-downs hit banking stocks. The bounce in stocks sent Wall Street benchmarks to their best week since August. And President Trump's retreat from tariff threats boosted sentiment for a Xi Jinping meeting and a trade deal later this month.
Along with China, China would like to have something. As of this moment, we'll be meeting in a couple of weeks. We'll be meeting in South Korea.
You think
myself.
Go forward?
I think so. It looks like it's going forward. I think so. They want to meet. We like to meet. I have a very good relationship with President Xi, and we're going to see what happens.
Canadian and Brazilian stocks too gained on expectations of better trade deals with the US. The Canadian index gained about 1%, with tech, consumer and industrial stocks leading the rise. The Brazilian Bovespa rose nearly 2%. Gains in industrials, electric power and public utilities sectors led the index higher. Now, across the Atlantic, the surprise move was the gains in the French stock index. Despite budget worries, the French CAC gained over 3%. However, that optimism did not translate to the German and UK indices. The German DAX took the biggest hit with 1.7% losses for the week. On the other hand, the South African index showed modest gains with a nearly 0.6% rise. Having looked at market moves, let's now turn to the overall economic outlook. Starting with the Asia-Pacific region. In Asia, India still remains the bright spot. China's economy continues to show a loss of momentum. Beijing faces deflation risks, a recession in its real estate and consumer demand. US trade wars continue to weigh on Japan and Australia, with the outlook for most of the other regional countries in the negative. A slowdown in global trade from US protectionism is likely to offset any green shoots from domestic policies in Asia. In the Americas, the government shutdown is delaying the release of much needed data. So the problem is to piece together the economic jigsaw puzzle from other sources. Other data reports released are not looking too great, and weakening business activity and a cooling jobs market will likely push the Fed to cut rates again this month and in December. The outlook for Canada, Brazil and Argentina is also negative because of Trump's trade rhetoric. In Europe, the situation looks much worse from deepening troubles in controlling budgets. France is not likely to meet its budget target, with politics compelling economic disasters. UK continues to struggle to fill a budget black hole. Germany is losing its shine. And for most European countries, the best news will likely be that they avoid a recession. However, easing trade tensions could boost the region's outlook. Trump and Xi Jinping's meeting this month will likely shape the next phase of global economic outlook.
I think that things have de-escalated. We hope that China will show the respect that we have shown them. And I am confident that President Trump, because of his relationship with President Xi, will be able to get things back on a good course.
All right, there's more to discuss now, and I'm now being joined by Mithali Nikor, economist and founder of Nikor Associates, joining me from New Delhi. Mithali, thanks so much for making time for us. Always a pleasure speaking with you. Global markets, well, they've turned volatile. What's your outlook?
No, absolutely. Thanks a lot for having me on the show, and a very happy Diwali to you and to all the viewers. I think if we look at, for example, the Indian markets, and just zooming in a little bit on the Indian markets, because the trend in the Indian markets has been very different from the global markets in the last 2 weeks, mainly because of domestic factors. So what we've been seeing in the Indian markets in the last 2 weeks is there was a GST rate cut. The GST rate cut had a very positive impact on consumption-facing stocks. We started to see, a bull run coming in on the Sensex, on the Nifty, and the Sensex and the Nifty have actually risen by, about 1.6 to 1.5% in the last 2 weeks. And we expect that to continue for the next week or so throughout the Diwali period, because this is the season of consumption. This is a season of people going out and buying, and there's also been a massive rally in gold and silver prices on account of Dhanteras, which was just about 2 days ago. Now, when we contrast this with the volatility that you've pointed out in the global market indices, this pans out because this is India's festive shopping season. This is India's sort of season to celebrate, and this has been sort of a pivot towards consumption-led growth that the government has brought in with the GST reduction. So therefore, in these 2 weeks, we've really seen that the global indices are reflecting or continue to reflect that global uncertainty that was put in place with the 100% tariff on China, that was put in place with the US and their tensions with several countries around the world. But Indian indices a little bit different from the global, just because of the strong festive sentiment and consumption-driven growth here.
Yeah, and Mithali, that's essentially what I also wanted to get your thoughts on. Maybe a little more detail. Indian stocks, well, India remains the bright spot across economies around the world, but the stocks recovered strongly over the last 2 weeks. Do you feel that rise and that strength is going to continue through this week? Diwali is today, and through the rest of the week, will that trend continue?
Absolutely. I think for this week, and in fact, possibly even spilling over into next week, the sentiment in India is very different from the rest of the world. We are seeing that, for example, the government is coming in with the GST rate cuts and sort of buoying up the consumption-driven economy. If you see a lot of the sales that are happening across income categories, across product categories, all announcing that, the tax cut which has been announced, GST tax cut, we are passing on the entire benefit, and therefore the prices are considerably lower. We are seeing a between 5% to 20% reduction in pricing over different categories. This, of course, has some impact on inflation, but that still hasn't come in yet. And for the next 2 weeks, we do expect the consumption boom to continue. Also, remember that we are entering what is traditionally known in India as an auspicious period, even for marriages, even for festivities. So therefore, we do expect the consumption rally to continue, and that will have a positive impact on investor sentiment and stocks.
Understood. Let's talk about gold and silver prices next. Of course, they've been corrected. Do you feel silver prices are going to be corrected slightly towards the end of the last week? That's what happened. And what's your outlook going forward? Festive season, then the marriage season, then of course till the end of the year. We understand how India is in terms of its spending, at least North India. Give us your outlook.
No, absolutely. And even South India. I mean, the kind of gold buying that we see in the South,
100%.
I don't think North can even compete.
It can't be competed. Yes.
So no, but on a serious note, what we've seen for the last 3 days, I mean, Dhanteras is obviously an exceptional festival across the world. I mean, I don't think that this level of precious metal buying takes place anywhere in the world as it does on Dhanteras in India, and therefore we of course saw the run out of the much reported run out of silver at the MMTC Pune mine. So that did happen, but of course we've seen that the rally has slid back since then. Silver's actually come back by about 6%. Gold is of course a little bit higher, but still lower than the Dhanteras high of 4,300, where it touched on the global scales. So definitely we'll see some pullback as we come back to non-festive levels. But still, at the same time, this is reflective of a broader trend. This is not just reflective of the festive trend. We've seen that silver and gold ETFs particularly have been doing exceptionally well across the world in several emerging markets, including India. And that's reflective of the geopolitical tensions and the fact that people are now looking to diversify their portfolios away from just high risk equity markets or high risk debt instruments and coming back to the gold and silver ETFs that are backed by the precious metals.
Mithali, thanks. It's Diwali. I wish you a happy Diwali. I'm going to let you go for now. Please continue with the festivities. Thanks so much for joining us here and sharing all your insights. There will be more to discuss. We'd love to have you on World Business Watch again.
Thank you.